taking a look at how the MPC scenario could be playing out going forward. Of course, very high interest rates there, coupled with very high inflation numbers. And the key factors that are going to play a major role in the run-up to the March 2013 Kenyan elections, of course, being economic and political. And here to dissect those points, Brian Dlamini, sovereign risk analyst at Rand Merchant Bank. Thank you so very much, Brian, for joining us. You've actually highlighted three major trigger points and major themes that are going to define the lead up to the 2013 elections. Let's start off with inflation. We've spoken about it quite a bit now. Are you confident that this very tight monetary policy environment is going to have the desired effect?
Largely can be said that remains to be seen. The effect that this is having is obviously on the consumer or on the man on the street, and also on the cost of doing business. So we just had one of our colleagues who visited the country just last week saying that there may be a lagged effect in the system. We will still see what the effect of the high interest rates will be on NPLs and on the man on the street. So we will see, I mean, that is still going to play itself out on how people feel on the street, which is very important in the lead up to the elections. It will give government credibility if they can bring the cost of lending down. And secondly, what it will also do, it will make it easier for the campaigners to campaign, because they can now point to the government's track record, should it be one of the two coalition parties.
Just looking at this very prudent stance that the Kenyan MPC is taking, when you look at what happened in 2009, 2010, we actually saw a rate cut at a time when many people were becoming quite skeptical. Do you think that that exacerbated the inflation environment just by cutting rates 0.5% at that point?
Well, largely it can be said that you know, the central bank lost its credibility even towards the end of last year, and they had to do something. They had to hike rates. They had to really play with the system to try and get to the end goal, which is what they're trying to do now, which is reduce interest rates. I think obviously going forward, what RMB is forecasting is that interest rates will start coming down towards the end of the year, and one still, I guess, has to see what will happen. The factors at play for the country are obviously external. The shilling might be volatile. That might affect the import bill. And on top of that, we might see high oil prices, which will have affected at inflation.
You mentioned the shilling, and it actually hit a record level against the dollar just yesterday. Do you think that this is a signal from foreigners? And we know a lot of remittances, and it was even mentioned in the MPC announcement that we're still seeing very high remittances coming through into the country.
That is actually one of the key strengths for the country, is remittances. It's very good for the country to earn that forex, so that it can assist the country in terms of a buffer should a shock occur. And secondly, we've seen tea and coffee prices really doing well, which has assisted the country to earn that much needed forex.
With regards to the geopolitical issues, I know that that is now the second big theme that you hold with regards to the lead up to the 2013 elections.
Yes.
Is there a risk that we should be focusing on here?
Well, where that is, as far as that is concerned, one will have to see if you know, how the Kenyan troops do in Somalia, if they're able to contain the situation, if the country can put a lid on this terrorist attacks that happened in the country last year. So it's very easy for a terrorist organization to do something whilst it's election season, and then that would obviously complicate issues. No one would know who was at fault, or if it was you know, an act of terror, or if people would be exploiting the uncertainty due to the geopolitical tensions. So going forward, one will say, you know, that is very important how the country handles this going forward. They have to keep a tight lid on the situation.
And have to be well prepared, obviously, from a security perspective.
And well prepared from a security perspective, whilst also focusing on the elections and making sure they occur properly.
Another big point on the agenda, this is the third big theme that you're looking at, and we've seen very high-profile people resigning with regards to this. In fact, the Minister of Finance, the ICC trial involving the Ocampo 4.
Yeah.
We're going to expect resolution with regards to this. How is this going to affect the sentiments in the country?
Well, we saw when the finance minister resigned, there was no reaction from the shilling and the stock market, indicating a bit of confidence, you know, saying that maybe it's a positive move, that there's decisive action, first of all, but then secondly, it could be positive that they are saying, the markets are reading into this, that nobody who is got question marks over their head it should be in the running to become president. So that's one can read on the Ocampo 4. But I think the more important I think there is that it will determine who will be able to stand for being president. That's what this trial will signify.
With regards to the overall investment case for Kenya, and as we've mentioned, hyperinflation, this is quite evident, although it is expected to come down to hopefully single-digit levels by next year. We're seeing geopolitical tensions as well. What is the investment case for Kenya right now? Do you think we're looking at it from a very high-risk profile perspective, or do you think that we can dampen these issues that we've been talking about?
Fortunately for the country, its external rating was affirmed by S&P in December last year. So that is a good sign, and it's a positive for the country. In addition to that, we've seen with the resignations of high-profile politicians, the markets haven't really reacted adversely to that, in fact, positively. So one can say that there is an investment case. The country holds a B+ external rating from S&P, which is good. What will obviously affect, say, the equity markets is the cost of doing business, which will eat into the profits of many companies. So one will have to see what markets read into the financial or economic fundamentals, whilst at the same time they look at how the political scene is going to play out.